So I think they're in a tough situation because if they reset, it could trigger a hyperinflationary boom. They would get, though, about $1 trillion from the Fed if they did this revaluation, which they could use.
That is definitely not how I see it. That would be like pushing on a string to revalue it to somewhere near current intrinsic market prices. That would not help pay off the debt.
You think 10,000? What's your figure? More?
If they did it today, it'd be a minimum of 40,000.
40.
You know,
Okay.
that's if they do that on a one-to-one basis.
Every central bank on the planet, including the U.S. Federal Reserve, holds what's called a gold revaluation account. It's a hidden ledger line that quietly tracks the difference between gold's official book value and its real market price. Lynette Zang and Mario Innecco say this account exists for one reason: to prepare for the next monetary reset. And history shows resets have happened before. The U.S. has already revalued gold against the dollar 4 times. First in 1933 to 35 when FDR raised the price from $20 to $35 an ounce, again in 1938, then in 1971 when Nixon cut the dollar's tie to gold, and finally in 1973. Each adjustment was small enough to avoid mass panic. But this time, the global system is buried under a mountain of debt, and a small tweak won't cut it. Zong estimates that to back today's debt with gold on even a partial basis, the metal would need to be revalued to at least $40,000 an ounce. Factor in the trillions in derivatives and hidden leverage, and that number could climb much higher. The problem is timing. Revalue gold too early, and the true scale of the debt crisis is exposed. Wait too long, and the currency collapses from lost confidence. One way or another, Zong says, the result will be the same: a massive repricing of gold, a breakdown in paper-based promises, and a global rush back to what's always survived every reset in history: physical gold and silver. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Every single central bank has a gold revaluation account. In the US, even though people don't realize it, our currency, the US dollar, has been reset against gold 4 times. Back in 33, there were 2 times, right? The $35 from $20 to 35, then from 35 to 38, and again in 71, and then again in 73. So people don't know that because they tried to keep those overnight resets small enough so that the people don't complain. This one, I think, is going to be much, much bigger because they have to settle out the debt. And they have to get rid of it because if the new system is based upon debt, they need a clean balance sheet. And look, I could be wrong, but I'm willing to put my technical neck absolutely on the line and tell you that I am convinced that the advent of the stable coins is going to usher in that hyperinflationary event. And then they will do that overnight reset in a very large way. But it won't still yet be to the fundamental value. Because globally, on average, when they do these overnight resets, they do it 3 times. But as we've seen in Venezuela and Zimbabwe, they're now on their 6th time. So I don't know how many times they're going to do it. But the only thing they have left is money printing. And the more of that they print, the higher in nominal terms, the higher that goes. So we could be looking at trillions of dollars for an ounce of gold. But let me tell you, you won't be able to buy anything just like that $10 trillion Zimbabwe note. It means nothing, nothing. Don't be blinded by numbers. Understand true value. And when one system dies and it resets into another one, and I've been talking about the reset since 2009, Gold and silver's job is to hold your purchasing power intact so that you actually have something to work with into the new system. Plus, you have the ability to take advantage of opportunities that'll present all along the way. But that's gold and silver's job because they're sound money that cannot be inflated away because they are used in every single sector of the global economy. This is used one place. This is used one place. These are used every place. It's not rocket science. It's simple supply and demand. And as long as they could satisfy demand with paper contracts, that's what they did. But now the tides are turning. And now people, entities, they want the physical. And there's not enough physical to cover all the contracts out there, let alone any of the additional derivatives that are hidden from us.
So I think they're in a tough situation because if they reset, it could trigger a hyperinflationary boom. They would get, though, about $1 trillion from the Fed if they did this revaluation, which they could use. But is that how you see it, or you think they?
No,
No?
that is definitely not how I see it. That would be like pushing on a string to revalue it to somewhere near current intrinsic market prices. That would not help pay off the debt. I see it significantly higher than that. And I think it'll look more like what we saw in Venezuela, not going up a few hundred times, but how about several thousand times? And they can't pull it out before that because as soon as they do something like that, it fixes the debt where it is, where they really need to repay that with dollars that have no value. So
So
rather,
you think 10,000? What's your figure? More?
if they did it today, it'd be a minimum of 40,000.
40.
You know,
Okay.
that's if they do that on a one-to-one basis. But the reality is nobody knows, and you know this very well, you know, all of the big kahunas admit, the BIS, the FDIC, the IMF, the Federal Reserve, the World Bank, everybody, take your pick. Nobody knows the true value at risk because derivatives are about leverage. And many of them at 1,000 to 1, or maybe even more than that. So you have $1 worth of equity and $999 worth of debt on top of that equity. It doesn't take a very big move to wipe that equity out, and then you're completely insolvent.
Lynette Zang points out something few people ever think about. The Federal Reserve was built on corporate debt. When it was founded in 1914, corporate IOUs were essentially converted into Federal Reserve notes, which became the dollars we use today. In other words, the U.S. monetary system has always been based on private debt dressed up as national money. Fast forward to now. Trump's signing of the Genius Act, which effectively legalizes stablecoins, marks another turning point in that same story. Whether most people realize it or not, that law rewires the foundation of how money is created. The old question, what backs new money in this digital era, finally has an answer: debt and purchases. Zang explains that under this new structure, both governments and corporations can issue their own stablecoins. But in the US, those coins must be backed by either dollars or treasury bonds. That requirement instantly creates fresh demand for government debt, ensuring that treasuries remain central to the system. It's the same mechanism that kept the dollar strong during the 1970s petrodollar era, only now it's happening through digital money. The setup may look innovative, but it's really the same playbook, modernized for the blockchain age. Let's get back to the interview.
In any Ponzi scheme, you've got to have confidence. So with President Trump going in, and he is a change agent, like him, hate him, his job is to change the system, and he's absolutely doing that. One of the things that you're referring to is the Fed independence And I say that with some level of hesitancy because if you go back historically, the Fed has never been completely independent. So it's a joke. And what we've seen over time is that loss of independence because the public is supposed to think that the Fed is doing everything in their power for the public's best interest. But it's not. It's to save the Fed and it's to save the private banking system. And it's really a merger of government and corporations, which is not the definition of democracy. But it's been that way since the very beginning. And something most people don't know, and I find this really interesting, and I have the hard evidence. I'm happy to send you the link, Mario. But it was corporate debt back in 1914, that was turned into Federal Reserve notes, corporate debt. And now with President Trump's signing of the Genius Act, legalizing stable coins, what people do not understand, but they really need to, is that the monetary system has been changed, period. And in our conversations, Mario, you remember we asked the question, well, what's going to justify the creation of this new money? And personally, everything that I'd read from the IMF, the BIS, the World Bank, et cetera, that it was either debt or purchases. And with the signage of that act, the answer is now crystal clear, and it's a combination of both. Because you have corporations and governments can issue stable coins too. And you're seeing a whole bunch of them do that. But in order for here in the US for corporations to issue stable coins, they have to back them with dollars or treasury bonds. So like in the early 70s when Kissinger went to Saudi Arabia and created the petrodollar to create artificial demand for dollars, that's what this is exactly about, creating that artificial demand for dollars. Because when you, the public, go into, say, a place like Amazon, what are they going to do? They're going to nudge you to spend. And that means that your dollars will be converted into stable coins. And then that issuer, say Amazon in this particular case, has to turn around and buy the equal amount of treasuries so that these stable coins are 1-to-1. But here's the problem, and it doesn't matter whether it's US dollar stable coins or Chinese yuan stable coins or hoochie cooch stable coins, quite honestly. What are they backed with? They're backed with this garbage that's being devalued and inflated away. I actually believe that that's what will usher in the hyperinflation that the governments need to repay all of that unpayable debt with currencies, fiat currencies that have zero value. So yeah, I think it'll fail. No doubt in my mind. I think it's about bringing in that next crisis that then they can use to justify pushing us into the other system, which I'm saying no to. And I'm saying no just by positioning into physical gold and silver in my possession.
What's unfolding isn't a minor policy tweak or another cycle of financial reform. It's a structural rewriting of how value itself is defined. The threads of history, from FDR's gold confiscation to Nixon's detachment of the dollar, are now being woven into a new digital fabric where stablecoins, government debt, and gold's quiet revaluation all converge. The Genius Act may look like progress, but it also locks the next generation of currency into the same architecture of debt that's driven every previous collapse. What changes is the medium, not the motive. As the old financial order strains under unpayable liabilities, the revaluation accounts sitting in central banks could become the trigger for the next global reset, one that restores physical assets to the center of monetary trust while leaving digital money to serve as its shadow. The silence around this shift isn't accidental, it's preparation. When confidence falters, the reset won't be debated, it'll be declared overnight. Could this coming revaluation mark the moment when digital currencies finally expose their dependency on physical gold? Or will the next monetary reset blur the line between the two entirely? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.